3 stocks that I'm buying for September 2018. Now, as much as I want to include Chinese stocks on this list, I'm going to refrain from doing that because pretty much every single Chinese company is on sale. From Tencent to JD to SINA to Alibaba, if you've been waiting to purchase some Chinese stocks or pick up shares in Chinese stocks, this may be the perfect opportunity to do so. But like I said, today we're not going to be talking about Chinese stocks. We're going to be talking about 3 other stocks that may be good buys for September 2018. Let's go. Hey guys, welcome back to the channel. Hit that subscribe button down below if you're new to the channel, and drop a huge like on this video as well. We're going for 200 likes on this video. If we can get there, I'll release a second video for 3 more stocks to buy for September 2018. So let's see if we can get there. I challenge you guys. We haven't hit that on any of our videos, so let's see if we can get this to our first 200 like video. Also, if you guys haven't joined or checked out our Positive Investing VIP membership group, make sure to check it out. Links will be in the description as well as the comment section. In this group, I post every single trade that I make, whether that's for my long-term portfolio or my swing trade portfolio, and you'll see exactly what companies I'm buying and selling and exactly when I buy and sell them. So again, links down in the description as well as the comment section if you're interested. But anyways, let's get into our picks for September 2018. Coming in at number 1, we have to talk about this company. We cannot skip this company. It's such a behemoth. It's on a huge sale. It caught headlines around the world for what happened after its last earnings. This company, if you haven't guessed by now, is Facebook. So ever since the Cambridge Analytica scandal earlier this year, Facebook has really been on the radar for a lot of investors and has been at a great value for a lot of investors. Since that scandal, the stock rallied from something like $160 up to $220. And then after earnings, it took a huge hit on some earnings misses, and we dropped from 220 down to around 170 or so. So the stock is at another great value point. So this is again a huge opportunity to scoop up shares in the company, and that's exactly what I've been doing. Again, I post those trades in that VIP membership group, and I post exactly when I buy them, what cost basis I have, and all of that fun stuff. So I'm right now a huge buyer in Facebook. So like I said, they reported their earnings recently, so before we get into more details on this, let's look at the numbers that they did report. So we can see here that their EPS beat, however, other metrics that they posted missed. Revenue missed, but it was a minor miss and wasn't really the main reason the stock dropped 20%. I think the real reason is if you look at the daily active user numbers, that missed globally as well as within the United States. And this was kind of the main concern that investors had, because now there's kind of fears out there that maybe Facebook isn't growing, maybe Facebook has reached its peak, maybe they're going to start losing users now every single month. So a lot of things started coming up and a lot of investors started panic selling. However, if we look at the last metric here, the ARPU, which is average revenue per user, that was actually up. And that's actually a healthy sign because it shows even though they had less users, they still made the same amount of money or more compared to when they had more users. So it pretty much tells us that Facebook is really efficient with how they make their money, and they're able to squeeze out more dollars per user than they did before. So some investors believe that this drop after earnings was warranted and made sense. In my opinion, I think it was completely irrational and was a complete overreaction. We probably, in my opinion, won't see much movement in this stock up until next earnings report, and that's why I think it's actually a huge buy, not only for this month but for the next couple of months until they release their next earnings. If their next earnings does beat, I think that the stock will continue its rally higher and start going for that huge gap that it created after its last earnings report. So keep in mind that the bar is now kind of lowered for Facebook. People are expecting, again, a miss on numbers, a miss on revenue and all that stuff. So if Facebook does come out with a beat, that's going to result, in my opinion, with a huge rally in the stock. So now let's take a look at what analysts think about Facebook and what's going on in this space. So for this, I'm actually using a website called TipRanks. So TipRanks is a great service where you can actually go see what analysts are doing for certain stocks with upgrading, downgrading, their price targets, all that fun stuff, as well as other things on companies. You can get insights for news, insights for, sentiment overall. So there's a lot of great information in here with TipRanks. Now, if you're interested in signing up for TipRanks, I'll leave a link in the description. It's completely free. You can sign up for completely free. And if you do want access to some of the more advanced features, you can choose to upgrade your service there. So check the link in the description to sign up for TipRanks. Excellent service. I've been using it personally and I highly recommend it. But anyways, getting into this, we can see that most analysts are really bullish on Facebook. Only 2 have a sell rating and only 4 have a hold rating. The rest are all bullish. And the average price target is around $207 per share, which provides a huge upside from its current $170, $175 per share. Now looking at the charts for Facebook, we can see here that it recently got rejected by its 100-day moving average, which shows us that selling pressure is still strong. Now the bulls can't take over just yet, as sentiment is right now pretty mixed with this stock. And I wouldn't be surprised, and in fact I'd actually be happy, if we came down to around $160 per share, where I see very strong support in the stock. Now, this would be a strong buy for me if it did come down to that level. I mean, it's already a buy, but if it came down to that level, it would be a very strong buy. But in my opinion, we may never get to that price in the near term, because the next earnings report might actually move the stock much higher. That's just my opinion though. Now we also see that the 100 weekly moving average happens to be at 160 as well, so that kind of confirms a strong support for the stock. So I'd keep a close eye on $160, as that's a key level for the Facebook stock. Now if for whatever reason this level breaks, that's when this would actually turn into a more bearish stock for me personally, and that's where I might actually look into start buying put options and playing the downside here on Facebook. But we'll overcome that hurdle if and when that does happen. Okay, so now we got rid of the elephant in the room. That was one we had to talk about. We could not talk about Facebook. But now let's get into our next company, and this is actually an insurance company, and it's actually an industry that in my opinion is often very overlooked, even though most of us have insurance in some way, shape, or form. That's either in auto insurance, either in home insurance, or either in life insurance. A lot of us have at least one, if not 2 or 3 of these insurance offerings from companies. Well, when looking through different insurance companies, there was one that stood out to me personally, and that company is Manulife Financial. They are actually the largest insurance company here in Canada, and they actually are a worldwide company, not only in Canada, but also in the US and Asia, and they have around 20 million or so customers worldwide. The stock caught my attention actually because even though the company has been growing nicely, it's been posting good numbers, posting growth, everything's good for the company, the stock actually has been moving fairly sideways in my opinion, and I think that poses a good opportunity to enter this stock. On top of a good entry price, we also get an excellent dividend yield on this company. As of right now, you can get a 3.62% dividend yield if you pick up shares in Manulife Financial. So this is not only a pure play for the stock price to appreciate over time, but it's also a good stock to hold for the dividends and for some, diversity in your portfolio. Now, if you look at analysts, they also feel pretty good about this company, and they have roughly around a 20% upside from the current price. We can see here that since it's a Canadian company, most of its coverage is really done through the Canadian ticker on the TSX. However, if you do want to purchase Manulife in the US, you can purchase it under the ticker symbol MFC. Now looking at the technicals for Manulife, we can see here that it's been hovering around this uptrend support for a while now, for actually a few months now, and we haven't really dipped much below it. And every time we seem to dip below it, we seem to recover and start moving a little bit higher. Now this tells me that there's a lot of buyers finding value at this level. The sellers aren't able to push this even lower. Buyers keep coming in to buy it and push it a little higher. So it's a level that I suspect will continue to hold in the stock. But in my opinion, what I think we need here really is a catalyst either for the company or for the insurance industry in general to move this and other insurance companies higher. But in the meantime, what we can do is sit back, relax, enjoy those dividends from this company, and enjoy the diversity that this company provides for our portfolio, especially for those of us out there that have tech-heavy portfolios. So now number 3 is a stock that I have not talked on this channel about before. It's not that well known of a company or a stock, and it's also a very high risk and high volatility stock. So I would trade the stock with caution, but if you do want to understand what this company does and why I'm looking at this, the company is called Optoelectronics, and they go under the ticker symbol AAOI. So what they do actually is design, develop, and manufacture different optical components, laser transmitters, and fiber optic transmitters, amongst other things that they do in this space as well. Then their products can be used with things like FTTH, which is fiber to the home, maybe even for cable television, CAT TV, network infrastructure, or really anything else that requires data transmission at high speeds. What I like about this company, what I like about this stock, what I like about this sector is that it's actually been hit a lot recently, and this is why it provides a lot of upside for the future. As long as this company is consistent with their earnings, and they consistently beat on revenue and earnings and all of that stuff that investors and analysts keep watching, I think that this stock has a lot of potential to move up significantly over the next year. So now if we look at analysts, we can see here that they're fairly mixed on the stock. And that's because it's a business that has a lot of wild swings. So if you look at 2017, it was a phenomenal year. If you look at 2018, not so great of a year. And this is why some analysts have actually turned bearish on the stock. But I believe that this actually has a lot of upside potential still. Now, because analysts are also bearish, a lot of people start shorting the stock. So if we have a good beat on earnings, which we just did recently, the stock usually jumps a significant amount because there's usually a short squeeze that happens. Now, if you look at the charts here for AAOI, we can see how this has come down to its moving averages and is pretty much hovering around that. It bottomed out sometime in April, and since then it's moved up quite a bit. And as long as we can hold above our moving averages, I believe that we're going to make a run for the gap and attempt to fill it. And that would kind of be my strategy for this company and this play. But I do want to reiterate that this is a very highly speculative stock, a very highly speculative company, and it's also a very highly volatile company. So there's very high risk if you do want to enter this. For reference sake, if you look at the stock, it went from $8 a share to $100 a share in a year. And then the next year, it went from $100 per share down to around $20 per share. So massive potential, massive swings, but you have to play your cards right with this stock. I have played positions in AAOI previously, and I have had successful swing trades in this because it is a stock that moves significantly when it does move. And currently I do have a position open in this, so if you're part of the VIP membership group, you'd see exactly what my cost basis is, you'd see how many shares I own, all that fun stuff in this company, and more. Anyways, that's all I have for the stocks for September 2018. I hope you enjoyed this video. Links again in the description for tip ranks, for our Facebook group, and our VIP membership group. And I just really want to conclude by saying that 2018 so far has been a very wild year for stocks, volatility all over the place, stocks all over the place, but there's still a lot of good opportunities out there for both long-term investors as well as swing traders. So don't miss out on the volatility that we're presented with, take advantage of it, and just take what the market gives you. Remember, you don't only have to play upsides in a stock, you can also play the stock to the downside if you think it's going to drop significantly. That's something that a lot of people forget, so just remember that that's an option as well. Either way, guys, hope you enjoyed this video. Subscribe down below if you're new to the channel. Drop a huge like on this video. We're going for 200 likes if you want another bonus video on 3 more stocks I'm buying in September. If we hit 200, I will make that video. Thanks for watching, guys. Don't forget to invest positively, and I'll see you in the next one.